Now to take a look at some of the news that were making the headlines in the world of business. Let's get analysis of the markets for this week with Owen Khumalo, who is CEO of Weaver Investments. Thank you very much for coming.
Thanks for having me, Colin.
Let's start with mining. As it was making the headlines this week, it's taking strain, production decreasing at 3.2%. What does this mean for the industry?
Yes, I would actually call it a mixed bag. So the latest numbers are disappointing, down 3.2% as you say. But if you go back a month, and the 3.2% we're looking at is for the August numbers. But if you look at July, production was slightly up in the mining sector. But it's a symptom of the challenges that the mining sector is facing in South Africa. But there is a saving grace because some of the miners are actually propping up the performance that you're seeing on the JSE at the moment, and that saving grace is commodity prices. So if you look at the gold, platinum, and iron ore prices, those have been rising. So as much as production is down, but sales of mining commodities have actually been up to the extent that some of the miners like Impala Platinum and Anglo American are actually considering paying dividends, which they haven't done in quite a while. So things are negative on one side in production, but on the sales side, things are looking much better.
Do you think that things are looking up for Eskom in as far as the 29 billion rand bailout from government, and also whether or not it will be able to meet the conditions that have been set forth?
It's an important lifeline for Eskom. They need that. So it's actually a larger amount. It's 59 billion. And this is on top of the 69 billion that the finance minister announced in his maiden budget speech in February. But this time around, the shareholder, which is the government, has actually come up with some conditions to say, look, and I think that's proper. That's the right approach to take as a shareholder, to say we cannot just give money willy-nilly to an underperforming state-owned entity like Eskom, although it's an essential service they provide, but here are some conditions. In fact, they've outlaid 28 conditions attached to that 59 billion rand bailout. And high level, they're looking at actually micromanaging some of the things. Like they want daily reports of the cash flow situation of Eskom. They want monthly management accounts, and they want detailed plans in terms of how the Medupi and Kusile power stations are going to be finished, because they are years behind schedule, and also the cost projections in terms of how much it will cost eventually, because they are way above the initial projected costs. They're over budget by billions. So I think it's an important step with this latest bailout for Eskom, that the shareholder is saying, look, we can't just be Father Christmas to this SOE. We need to place some conditions that will enable this SOE to be financially sustainable. And one of those key conditions as well is they need to collect debt. Because the national department, so they need to start, charity begins at home, so the government actually needs to play its part. The national department owes Eskom, the municipalities owe Eskom, and the rest of the private sector as well. So Eskom needs to get very creative in terms of how they collect debt, and it runs into billions, over 40 billion owed to Eskom.
So when you look at the Absa Purchasing Managers Index that declined last week, and as well as manufacturing down 1.8%, compared to 0.7 in July. We're looking at a problem here when one would be skeptical if we're going to get a positive GDP figure going forward.
Yes. Yeah, the news is not encouraging at all, but some of that sentiment is, and if you look at business confidence, is based on the August numbers. September, there's been some positive news. In fact, I was looking at the business confidence numbers for September, and business confidence is actually positive. So we up from 89 points to 92 points on the business confidence index, and that's on the back of expectation that we're going to see a more reform-focused medium-term budget at the end of this month, on the 30th of October, when the finance minister presents his medium-term budget speech. But if the market again gets disappointed in terms of those expected reforms, that might actually erode that business confidence.
All right. So when you look at the hottest topic in the financial global markets is the issue of whether or not we're going to have a global recession. What's your view?
That's a very difficult one to call. I was saying earlier to you before we went into studio that it's easier to call the direction of one economy. But if you look at the global economy, it's quite difficult to say, well, which way is it going to go? But there's some indicators we can look at. So obviously, the global economy is driven mainly by the US. That's the global engine for growth. Europe and emerging markets. Emerging markets are becoming more and more prominent in terms of driving GDP growth on a global space. So if you look at what's happening in the US, they're not knocking on the door of a recession, but the economy is slowing. They've had a good decade of good GDP growth numbers. Projections for 2019, the US economy will grow by 2.9%, and that's expected to slow down to 2.3% in 2020, and that should come down to 1.8% in 2021. So there is a slowdown there. And if you look at more pessimistic economists and forecasters, they say, well, they will go into a recession probably early next year because the yields are inverted in the US. And every time we get inverted yields, bond yields or treasuries as they call them in the US, is an indicator of a recession. So when you've got your short-term 2-year US yields giving you higher rates than your 10-year bond, that's the situation they're facing. So there's a slowdown in the US. Secondly, if you look at Europe, Germany, one of the Europe's largest economies, they've had a negative GDP growth number in the second quarter, negative 0.1%, and the expectation is that that's going to worsen in the third quarter. So they could actually technically go into a recession, and if that happens, they will contribute to a slowdown in global growth. You look at emerging markets, as I said, South Africa is not in a good space. We just narrowly missed going into technical recession because we got good GDP numbers in the second quarter. We'll see what happens in the third quarter. But places like Argentina struggling with debt and a currency crisis, and China also slowing down in terms of the economic growth and trying to shift the focus of the economy from manufacturing to services. And there's a lot of debt that China is actually struggling with at the moment. State companies have actually borrowed, so have consumers, and banks are actually faced with some default on loans at the moment. So it's not an encouraging basket of news around the world. And then we've got Brexit as well. A no-deal Brexit is not good for the UK. But it's also not good for global growth, given that the UK is the world's 6th largest economy. So those headwinds that we're seeing all contribute to this sentiment that we actually might go into a recession at a global economy level.
Right. Well, thank you very much for your insightful analysis of the week that was. And of course, we'll see you next time.
Thank you, Colin.
Right. Owen Khumalo is CEO of Weaver Investment right here on SA Today.